Alibaba first approached Hong Kong and wanted to list in Hong Kong. But there was a problem. Alibaba wanted to have a structure that kept control in the hands of management. And this has been something that technology companies have focused on ever since Steve Jobs got thrown out of Apple. And Steve Jobs got thrown out of Apple because he was no longer in control of the company. So since then, many technology companies, including Facebook, structured their IPOs in a way that there were two classes of stock. One class of stock that would be held by the insiders. Zuckerberg, in the case of Facebook, would keep control of the company even if they sold their shareholding interest down to a minority. So Chinese companies really like that structure. Chinese entrepreneurs do not want to have public shareholders vote them out of their jobs. They're not going to do that. And so they would prefer to have a structure that has two classes of stock. One class of stock that they own that has the voting control, and another class of stock that other shareholders have that has all the same benefits except for no voting control. Hong Kong does not allow that. Hong Kong says one share, one vote. That's a very fundamental principle in Hong Kong corporate governance. The U.S. doesn't have that. The SEC in the U.S. will allow you to use any corporate structure as long as you explain the risk to investors, and investors can make their own decision whether they want to invest in a company where they don't get the right to vote. The way the IPO market has been going recently, shareholders don't seem to care too much about the right to vote. So Hong Kong has a very firm principle, one shareholder, one vote. What Jack Ma and Alibaba did was come back to Hong Kong and say, okay, we understand the principle of one share, one vote. We have another proposal. We'd like to use a partnership. And this partnership will be made up of a number of Alibaba executives. They will propose all directors for the board, and then the shareholders can vote on the directors that are nominated by this partnership. And Hong Kong studied that very hard and finally decided that they could not accept it. So Alibaba abandoned its plans to list in Hong Kong. Now this is a very threatening event for Hong Kong, because if Hong Kong does not win the major IPOs out of China, the Hong Kong Stock Exchange's future is in doubt. Its primary purpose for existing is to serve Chinese companies that want to list abroad and need access to the world. And if it's not accessible to private companies because they won't allow them to maintain their control structures, then these private companies are going to go to New York, and that would be troubling. So I expect that Hong Kong is going to be under great pressure to modify its rules.